Merry Christmas, this is CH. This video is part of a series of videos titled My ABCs or Absolutely Biased Comments on one mutual fund per video to share how an individual investor like you and I can try to find out more about a mutual fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product's sales pitch or a recommendation to buy. I am not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. The information shown and mentioned in this video is accurate as of the date stated here. In this video, I will be talking about the Capital Group New Perspective Fund. Now, the first thing we need to figure out as an individual investor is where can we obtain information and documents on the fund. Capital Group has a pretty detailed Singapore website that is further segregated by 3 investor access types. I will be referring to the individual investors' access most of the time, but will sometimes also refer to the institutions and consultants' access and the financial intermediaries' access for additional information that are not found under individual investors' access. FundInfo is a global third-party consolidator and service provider for the fund data and documents, and has information on at least 90% of the mutual funds offered in Singapore. So if there is a need, we will be checking the information on FundInfo as well. As you can see on the screenshot, the fund has 78 share classes registered in Singapore, but many are actually not meant for retail investors. You can of course also get some information from your distributor, which is your bank or online platform that you buy funds from, as long as they have the fund on their offering list. And finally, the web is always readily available, waiting to answer your search queries. Before we go through the fund details, let's spend a quick moment to understand who the fund provider, Capital Group, is and what they are good in. Capital Group is a US-based asset manager founded in 1931 by Jonathan Bell Lovelace. The firm started managing their first fund in 1934, which is still running today. Capital Group is privately owned by 450 partners as per Google results, so there is not much details on its financials. But they did state that they currently manage over $2.7 trillion worth of assets under management, with more than 2/3 in equity solutions. Capital Group has a unique capital system established since 1958 that essentially splits all their investment portfolios like a pie and have each piece run by an individual manager or analyst. The person responsible for the piece of the pie is also typically invested in the portfolio, so there is alignment of interest to ensure success. Capital Group is also one of the less common asset managers that allows research analysts to be on par with managers and be directly responsible for a piece of the pie. This approach was aimed to eliminate the star manager key man risk and also to diversify views, which has proven successful for Capital Group through the years. Capital Group emphasizes on deep fundamental research and long-term investment view. On firm basis, the 126 portfolio managers and 210 analysts conduct more than 20,000 meetings with companies annually. 90% of the portfolio managers have more than 20 years experience in the industry. Something interesting that I don't see disclosed by other fund providers is that Capital Group pays their investment professionals by short, medium, and long-term results. While there is no further elaboration, this compensation policy helps to ensure investments are done with a long-term profitable mindset instead of betting for quick gains. Not much info is available for local offices. Capital Group website only indicated that the Singapore office was opened in 1989 and it currently has over 100 employees locally. Capital Group has been more active in the Asia region in the last 5 to 10 years and has been gathering awards especially for its focus funds. Now that we know a bit more about Capital Group, let's take a look at the fund. The Capital Group New Perspective Fund is a sub-fund under the Capital International Fund or CIF fund family. There are currently 32 funds in this Luxembourg-domiciled fund family, which reflects the strategies that the firm would like to market to international investors. The reason why there is a bracket LUX at the back of the fund is to identify this international offering from the other similar offerings. The original New Perspective Fund was incepted in 1973 in the US and is still running today at over 145 billion US dollars in AUM, while the fund we access in Singapore is launched in 2015 and with over 15 billion US dollars in AUM. Capital Group also has the same strategy launched in other local regions. For example, there is an equivalent Australia onshore fund with a bracket AU in the fund name. These funds are all independent funds and not master feeder fund structure, so there would be small differences in their portfolio holdings. The New Perspective Fund is a key equity offering from Capital Group and has a focus strategy page in the website, which is useful for investors. It is interesting to see there are some variations in the contents, as well as different marketing taglines used across the 3 different investor access types, as seen here. Try make a guess which tagline belongs to which investor access type, and find out the answer in the Capital Group Singapore website. The investment objective in the fact sheet has a lot of words but doesn't really mean too much. So, down to its essence, this is a global equity fund with the aim of long-term capital growth. The benchmark is MSCI All Country World Index with net dividends reinvested. Let's see how Capital Group tries to differentiate this fund from its competitors. There is a pretty decent fund brochure available in the Focus Strategy page, so let's make use of that. Firstly, change is the only constant for this fund. The fund is unconstrained by its exposures and is allowed to shift the portfolio in accordance to changes in the global economy and the investment themes that arise with the changes. This also means there is probably no need to be aligned to the benchmark at all. There is no mention of a central outlook view, so I assume the themes are either identified in consensus among the investment team or simply derived in common as different managers provide their high conviction picks. The investment team finds global champions that resonate with the leading investment teams to invest in through in-depth fundamental research. These are usually multinationals that have both the financial strength and growth potential, and can be already established winners or new entrants with strong potentials. Each manager or analyst that promotes their conviction pick is responsible for its successful contribution to the portfolio performance. The identified trends need to be long-term and sustainable, which leads to the associated stock picks needing to be long-term investments as well, unless adverse events happen or when a better replacement idea appears. There are quite a bit of emphasis on ESG in Capital Group's products, but I will skip those as pretty much all fund providers say they have ESG embedded in their processes these days. Following the capital system's multi-manager approach, the fund is split into 11 pieces. There is no mention about single position risk, but it seems that it is quite possible for the fund to have a big overweight in a position if it happens that most of the managers have a high conviction in the same stock, which hopefully the diversity of the different trends can help to reduce this likelihood. Next, let's see how the fund strategy translates into the actual portfolio. Again, the benchmark of the fund is MSCI All Country World Index Net Dividends Index. But remember, the fund strategy is unconstrained, and therefore deviations from the benchmark is expected. The screenshots here are from the November 2024 fund fact sheet. On geography breakdown, the fund currently is underweight US at 59%, but overweight Europe at 25%. Emerging markets and Asia total to only about 10%. On sector breakdown, things don't look drastically different. There are some small overweights in consumer discretionary and healthcare, and some small underweights in financials and tech. The fund has about 250 holdings, which is considered quite a lot, as most global equity funds have about 50 to 100 positions only. The number of holdings is probably the result of letting all the managers keep their convictions, but this obviously leads to quite a lot of them having insignificant size and impact to the portfolio. Top 10 holdings take up about 24%, so there doesn't seem to be a single concentration risk here. The stocks listed all look quite decent global market leaders, so all seems good here. But something feels missing, and I think it's the connection between the strategy and the portfolio. There is a lot of emphasis on the fund strategy going for the long-term trends and so on, but there is no mention about the specifics of the trends and how the portfolio positions are associated with these trends. It took quite a while for me to find this picture in the intermediary's website, but this is also not the specific trends that the fund is investing into. Sadly, I wasn't able to find any more details on this, so it seems this is like a bit of a black box. Let's take a look at the fund managers next. As before mentioned, Capital Group uses a multi-manager system for all its funds. For the New Perspective Fund, there are a total of 11 pieces of the pie for 10 fund managers and the last one for the combined research analyst team. There is a long list of individual bios available on the US website, but I will not go through all of them. What we can gather here is that these managers have all had at least 14 years experience working in Capital Group, so they are firstly very seasoned investment professionals, and secondly very happy working in the firm. The managers are located in various key cities of different time zones, so it helps with monitoring the markets round the clock. Of these managers, Rob is perhaps the most important person, as he is also the chair of Capital International and the grandson of the founder of the firm. Another important person is Jody, who is also the vice chair of Capital Group and the president of Capital Research and Management Company. Both of them have been with Capital Group for more than 30 years, and their presence in the team helped to reinforce the importance of this fund as a key product offering. We mentioned at the start that this fund has 78 share classes registered in Singapore, but many are actually not meant for retail investors. We will focus on the US dollars and Sing dollars share classes for Singapore retail investors for this video. Capital Group uses alphabet B to denote the normal share class for retail investors. A B on its own refers to the accumulation share class. That would be the usual share class that I suggest investors to go for if there is no need for income. In any case, the strategy of this fund is long-term capital growth, so there is no intent to generate a high dividend income for investors. A D refers to distribution share class, with the distribution being net of withholding taxes and expenses. The BD US dollars class is a yearly distributing class and has actually not paid any distributions for many years, so you should just invest in the B accumulation class instead. The BD Sing dollar class has been inactive since 2017, so it should be ignored as well. A GD refers to distribution share class with the distribution being net of withholding taxes but gross of expenses. Assuming all things equal, the GD class will distribute a higher yield than the D class and in turn retain less capital in the NAV. The BGD USD share class is a quarterly distributing class and pays a different amount every quarter, with a payout yield of around 1 to 2%. A H refers to currency hedge share class. As with all other funds, currency hedging is often not a precise hedge and is dependent on the fund's hedging methodology. Note that there are no distributing Sing dollar hedge share classes available. For a focused product, there are various other currency share classes available. Again, do take note if you are subscribing to a hedge or unhedged share class. The B share class of this fund charges a 1.5% per annum management fee. Adding other expenses, that comes to a TER of around 1.6%. This is a standard fee level for equity funds. Up to 65% of the management fee can be paid by the fund to distributors as trailer fees. The fund also allows distributors to charge up to 5.25% subscription fees, although anything more than 2% for mutual funds looks excessive. Finally, let's take a look at the performance of the fund. Capital Group website has one of the most flexible dynamic chart tool that I have seen in fund provider websites, where you can plot detailed performance charts of the fund down to daily data points with fully customizable start and end dates, and also the ability to add technical indicators like RSI, SMA, and more. However, you can only get this in the financial intermediaries access instead of individual investor access. Still, it is just a click away, so why not? From the chart, we can see quite easily that, for most of the time, the fund has performed quite close to the benchmark. The exception is the period between March 2020 to March 2022, when the world had COVID and the fund substantially outperformed the benchmark for about 1.5 years and then gave it back in the final few months. This was the time where many people thought that work from home and e-commerce and digital healthcare were to become a long-term theme. But I suppose humans are social animals and can't stay in isolation for too long. On trailing returns basis, the fund has been keeping close to the benchmark, with a 10.39% per annum since inception in 2015, compared to the benchmark of 10.47%. Looking at calendar year basis, we can observe that besides the significant outperformance in 2020 and the underperformance in 2022, for the rest of the years, the fund had not deviated from the benchmark performance too much. If we are looking at institutional share class, the fund would have outperformed the benchmark slightly through the years with a lower management fee. It is interesting that combining the convictions of more than 10 investment professionals yields us a result that is similar to the broad equity markets as represented by the benchmark in the past 10 years. But it doesn't make much sense if the fund can only generate a benchmark-like return, as I can get the same using ETFs. Therefore, what else can we consider for this fund? So, let's see how the strategy has performed beyond the past 10 years using the US vehicle as a reference. This chart is only available in the US website, by the way. As we observe beyond the past 10 years, it can be seen that the fund has lost less in almost all the down years, and there were more instances of outperformance in the up years. In one of the websites, it was cited that the strategy had outperformed the benchmark by 2.6% per annum since inception. Therefore, it probably boils down to this. Markets are obviously becoming more efficient, and it gets harder to find the hidden gems before the crowd joins in. So can the new perspective fund managers beat the crowd to identify more winning ideas and reduce the drawdowns, just like what they have done in the earlier decades? If there is a reason to put money into the fund now or to stay invested, the belief that the fund managers can resume their earlier days of glory would be the one thing. So the new perspective fund needs to deliver this performance rather urgently. Lastly, let's compare the performances of the US dollar class against the Sing dollar unhedged and the Sing dollar hedged classes. There is no right or wrong answer in this case, although we can see in the long run, the Sing dollar hedged class has delivered a bit better performance than the unhedged class. With that, let's summarize our findings and start with the good stuff. Capital Group, while lesser known in Singapore, is a large US asset manager with a long heritage since 1931. Many of the products offered here are the replicas of the successful solutions in the US business. The capital system, which is basically having multiple managers to each handle a portion of the portfolio, appears to be working successfully for the firm across its products throughout the years. The New Perspective Fund strategy has a very long track record since 1973 for its US vehicle. The Luxembourg version that is covered in this video is a replica created for international investors. The 10 co-managers of the fund are all very experienced professionals, and importantly, some are also the heads of the firm, which signals the importance of the fund as a focus product for the firm. Let's talk about the bad and the questionables next. There is unfortunately no details available on how the fund portfolio is split among the 10 managers and research team, and also how the fund handles overlapping ideas and concentration risk. While there is much talk about the fund strategy investing into long-term teams, there is no details on what are the specific teams that the team is currently looking at, and how the teams translate into the actual portfolio. It feels somewhat a disconnect when reading from strategy to portfolio. Performance of the fund needs to improve. The Luxembourg vehicle has delivered only about the same as the benchmark since inception, which is easily replaceable by an ETF. The fund needs to deliver a better performance that is similar to the prior decades to get that 2% outperformance or better for it to be attractive. This concludes my absolutely biased comments on the Capital Group New Perspective Fund. Would you invest in the fund or give it a miss? Or are you already invested in it? Do drop a comment to let me know what you think. Additionally, if you find this video useful and would like to see more related contents, please click on like, subscribe to the channel, and share this video to your friends. Thank you and happy holidays.